I'm going to resume the recording. Now, today I'm going to talk real fast because it turned out last month I had a little bit short on presentation and I felt bad. And this month I've got more slides than I know what to do with. So I want to go through them all, but we're going to talk a little bit quicker. As always, I'll make sure that there's plenty of time at the end for any Q&A and that we could do. Hold on, I'm just trying to get my chat up. If you do have a question, you can pop it in the chat. If we can just get a thumbs up, you can see my slide. Awesome, very good. All right, so today we have an interesting talk. We're going to talk about going from a LP, which is a limited partner, to a GP, and how can you transition from a passive investor to an active investor. Again, this is an educational series. I am not your financial planner. I am not your accountant. I am not your lawyer, but I try to provide information that I believe to be true and correct, but you must always do your own diligence anytime before investing. So again, coaching and mentoring and a strong team changed my life. What I'm talking about tonight, I lived. So I started as a limited partner. I invested in 20 syndications. Then I switched over to become a general partner sponsor in 14 for a total of 34. I always love connecting with all of my big dog friends. So I will be putting that link in the chat. Anytime you want to talk with me, you feel free to go ahead and book a call. I love connecting with people, answering questions about passive investing, helping you understand what you need to do on your journey. So again, I'm part of Massive Capital, and we're a vertically integrated real estate company. We're a developer of Class A retail and town centers, and we're owner operator of value add multifamily. We do have most of our assets are in the Texas market, but we do have some in Denver, Colorado, North Carolina, and Atlanta, Georgia. We do partner with Realty One on our retail development side, and they have about 300 million in assets under management. Massive Capital has just over 200 million in assets, and we do raising capital from retail and family office. We have triple net brokerage through Realty One. We do land development, steel frame construction, and then we also do have Massive Masters, which is a program that people can get to become an active sponsor. So today we're going to quickly talk again, what is a syndication and GP and LP? We're going to talk about the LP to GP overview, why LP experience is your foundation, finding your zone of genius. I decided to call it the zone of genius, finishing your year strong, and then always time for questions and answers.
And now, here's someone you want to hear from, our sponsor.
For over 15 years, Skyline Title has been a trusted name in Texas real estate. From first-time homebuyers to seasoned investors, our team ensures a smooth, reliable closing experience every time. Backed by a decade of partnerships and proven success, we take pride in protecting your biggest investment, your home. Visit SkylineHTX.com to learn more.
So again, I always loved playing Monopoly as a child. And then sadly, I became an adult. Well, I don't know if that's sadly, but I became an adult and I totally forgot that the people that bought the property, put the houses on the properties, turned them into hotels, won the game. And so I did what a lot of folks did. I got a good job. I had some really good jobs and I did very well, but I was terrified of toilets, tenants, and trash. And even after reading Robert Kiyosaki's Rich Dad, Poor Dad, which if you've never read it, you need to read it. You know, I understood leverage to buy real estate, but I still didn't quite understand how it worked. And I always thought I had to be a millionaire to become a commercial real estate investor. I had a pretty good payday. I started to learn about it, and I learned I didn't have to become a millionaire. So again, active income, right? I was working for my money. I was going around the monopoly board. It required my time and work and my energy. When I got let go during COVID, you know what? They stopped paying me. So passive investing, your money works for you. You're putting your money in money-making assets or businesses, and it does not require your time or energy. And again, we all know cash and savings, really no benefits. Bonds, you get a little bit of cash flow and tax advantages. Stocks, you get a little bit of cash flow and leverage. But on real estate, you get the cash flow. You get to use leverage to buy an asset. You are buying real assets, and those real assets come with amazing tax benefits. So how do we do these? We do these through syndications. So a syndication is a group of investors who pool money to buy or develop real estate. Syndications are ways for investors to invest in larger properties they couldn't afford on their own. How does it work? Sponsors, general partners. Remember, I'm in 14, one of those. It's a group of experienced real estate professionals who organize the syndication, secure the funding, and implement the business plan. And then we come and find limited partners, and that's my role within this whole thing, finding people to invest. They help us fund the project and they own a portion of the asset. So I'm going to do a simplistic overview of buying a property. We're going to go buy a $10 million commercial real estate asset. We're going to be able to get $7 million bank loan, which is a 70% loan to value, pretty normal. And the general partners, they're going to secure that financing. So they need the net worth and the liquidity and the experience to be able to get the financing. They're going to go off and buy the property. They're going to say, what is our business plan? What are we doing? But we're going to have limited partners invest into the real estate because we need the rest of the money. So we bought a $10 million property. We're going to raise $3 million from limited partners. Now, in reality, we'd be raising a little more. I'm just trying to keep it simplistic for everybody's point of view here. So, but this is where the real magic happens. We all know with real estate that we use leverage to buy it, right? So we're buying a $10 million property, but we only need $3 million for the cash because we're going to get leverage from the bank. But here's where it really flips on its head and is powerful for the limited partners. The limited partners are putting up 30% of the capital, but they actually own 70% of the asset. So when we make a dollar, they make 70 cents of that dollar. And us as general partners, we make 30 cents of that dollar. And again, as a limited partner, you have limited liability. You're not responsible for the loan. You're not responsible for anything that happens, anything that goes wrong. The general partners are. They're the ones that are responsible. Now, your original investment can be at risk. I want to be sure I'm clear. You can lose money in commercial real estate investing. It's not 100% guaranteed, but you will not lose anything else. If you go buy a single family home and your tenant trashes the place and moves out, well, you still have to pay the mortgage and you have to fix it. You're 100% responsible for everything. On multifamily or other things, we have lots of scale to be able to do it. You can target your investments to invest on specific projects. So again, I've mentioned, I've invested everything from value add multifamily to new build multifamily, medical centers, assisted living, storage, new build and existing. So you can mix and match what you're investing in and the returns are directly tied to the success of the project. We offer two types of deals on syndications. We always start our deals as a 506B. And for a 506B, we must have a pre-existing relationship and you must be considered a sophisticated investor. And that's part of my goal is to teach you how to become a sophisticated investor. There are only 35 spots in any deal for a non-accredited investor. So again, we offer these to our community first so that you get first access and there's no general solicitation. So for example, I currently do have a 506B deal, but because this is a public call, because this gets posted on a public internet site on YouTube, I can't talk about that deal. That goes against the rules of it. But when a deal is a 506C, only accredited investors can invest, and they're folks that have a net worth of $1 million, excluding their home, single income of 200, or married income of 300. But there are no restrictions to soliciting. So tonight, one of my opportunities is switch to a 506C, so I can at least tell the group about it, and I can do it in a public format. So it gives me the biggest ability to market to everybody. And no, there is no difference between 506B or C, only who can invest and can I market. So again, if you're interested to find about our deals and you're not an accredited investor, you just don't want to miss out, what you need to do is just book a call with me and say, Trevor, put me on your wait list. And all that means is I give you a sneak peek of the deal before anybody else gets a sneak peek. I'll send you a note, I'll send you an email, book a call, say, hey, I have this deal coming. Here's the basics of the deal. And often I'll even send it to you before everything's even ready to invest, just so you get the time to look it over. So make sure you do that. Here's an example of a deal that fills really quickly. This was my first RV park. And we started it out as a 506B. We needed to raise $2 million. And in 14 days, we had $2.5 million in commitment. So we actually had to not accept $500,000 of investor money. And again, first come, first serve on these deals. And we never switched it to a 506C because it was full. And we just decided we weren't going to switch it to a 506C. So again, you don't want to miss out on an opportunity like that by just not knowing about it in advance. And again, if you don't find a way to make money while you sleep, you will work until you die. Going to do this one quickly. We do this every month. This is the real power of passive investing, right? So we've already told you that you're going to own 70% of the deal. But the real power, passive investing in commercial real estate is not a get rich quick. It's a get richer slow because it's going to take time to build your money. So again, if you put $100,000 in a deal, and I'm assuming you double your money, and I'm not going to talk about taxes because depending on what you invest in, what your tax bracket is, everybody, so you'll have to figure out that there will be some taxes due depending on what you do. You invest 100, and in 5 years you turn it to 200. Then you take the 200 and you invest it, and it turns to 4. You take the 4, turn it into 8, take the 8, turn it into 1.6, 1.6 to 3.2 in 25 years, again, assuming you've doubled and assuming that there is no tax consequences, which there would be unless you were smarter than me and you converted it to a Roth IRA. I had a call today with a guy and he's converting his money to a Roth IRA. A Roth IRA grows tax free. So if you had your money in a Roth IRA and you invested $100,000 and you grew it to $3.2 million, you would earn $3.1 million tax free. Think about that. And think about this. This is only one investment. Continue to invest, right? You're not putting any new money into the system. You're only investing your original capital and how much it grows. So imagine if you could do like I did, right? I invested in lots of different deals, different amounts of money, not always $100,000. But you keep it always growing, right? And so you can get into the tens of million dollars as a commercial real estate investor if you have the time, right? Time is your friend. So again, Charlie Munger, first rule of compounding your money is never interrupt it. The king of never interrupting his money is Mr. Warren Buffett. That man, his money always gets reinvested. He doesn't buy a private jet. He doesn't go on a fancy vacation. It's a little bit boring. I might do a few fun things, but you look at the power, right? How his money has grown because he continues to reinvestment all the time. He's always investing. When he gets dividends, he reinvests the dividends. When he buys a company or sells a company, he goes off and he moves that money in. Now he is sitting on a lot of cash because he's an opportunistic buyer, but he doesn't pull the cash off the table and go do something with it, right? So why don't we ever do this, right? We're afraid of failure. And I'm going to do this quick because we've done this slide before. You feel overwhelmed. I don't quite understand all this. This is a bit complicated. I don't quite know what you're talking about. I don't know all these things. So you just feel this fear that, man, I'm just like, I don't know what to do. You want perfectionism, right? I'll do it once I figure it all out. I've been doing it 7 years, folks. I've never figured it all out. Okay. And the day I figure it all out, I guarantee you I've stopped growing and learning, right? I never figured it all out. Self-doubt. This is really not for me. It's not something to do. Social anxiety. Well, my friends may not think so. My parents may wonder what I'm doing, my spouse, whatever it is. And then you just feel like you're not going to succeed, right? And so the great Warren Buffett again says when be fearful when others are greedy and greedy when others are fearful. Right now, there's a lot of fear in the marketplace. And again, Warren Buffett did put $1 billion in real estate this year. So I think he knows that everybody's fearful and he knows that it's a good time to invest in it, right? Baron Rothschild said, buy when there's blood in the streets, even if some of the blood is your own. And again, I'm not trying to deny that there has been some major fluctuations in real estate space right now. There have been some serious resets in the market, but this is creating a great time to buy. So again, how many folks on this call went to a weekend conference and they said, well, you're just going to learn about commercial real estate. You call brokers, they'll send you the best deals they have. And when you find a deal, everybody will give you the money to invest in it. Okay, I've been raising capital for 5 years now, and I work really hard to fill every deal. It's hard work. There's a lot of things that happen. When I first started out, I was trying to do this on my own without a team, and I visited 100 properties in a year, and I made 20 offers, and I didn't get one deal. Very challenging to be able to do it on your own, right? So you want to be a syndicator. These are all of the hats that you're going to have to wear, which is why the power of having a good team, being part of a network and a community is super important for you, right? So again, when I first started out, I told you, right? So I was on a deal, 240 doors in San Antonio, and we never could close it. On this one, I only raised $375,000. I had to give all the money back, and I put up some at-risk capital, $75,000, and lost it. Okay, so tough lesson there, right? Tough lesson to lose that kind of money. My next deal, we had some changes in the lending environment. That's when the market started going really crazy. Thank goodness. We decided not to do the deal, and I personally didn't lose any money, but my friends that put the deal together lost over $100,000 on doing that. So it's not that easy, right? So you want to become an active deal sponsor, which is a GP. All right, you have to find the deals, right? How do I find the deals? How do I get the deals? How do I have people pay attention to me when I'm trying to get the deals? What do I do? You know, they told you just phone a broker, tell them you like, take them to coffee. Here to tell you that the brokers only talk to people that can close deals. Those folks are business people, they're salespeople, and they're looking for. So the deals you're going to get at the beginning are the ones that went to LoopNet, right? So when a broker has a good deal, he says, hey, I know Mike, he's bought 3 deals already, and this is a deal that's perfect in his wheelhouse. I'm going to send it to him because I think he can close. He's already closed 3 more. That's who gets the deal. And then when Mike doesn't pass on it, they may send it to someone else, and that person may not close on the deal. So the list gets broader and broader, and then they'll do some general marketing. I get emails every day on deals. So again, it's super challenging. Then you have to learn how to do underwriting. Big secret of mine, I am not the world's greatest underwriter. I can read it, but I really can't do it. I can read it, I understand it. Obviously, I look at a ton of it, but I am not the guy that's best suited to do that. It's not my area of genius. Now you get an LOI accepted. And I've seen this, boy. I'm in a group right now, and we're pumping out about 5 LOIs a week. And probably a quarter of them are sticking, okay? Because it's a lot of work. When the LOI goes out, you have to negotiate, you have to look at a deal, you have to start doing everything. Then you have to do this thing called due diligence. If you remember, a couple of times I talked about a deal we had in Midland, Texas, a retail strip center. Everything looked fantastic with the retail strip center. And we were there doing due diligence. And then we see this truck coming up and pumping some stuff out. We find out that they have an undersized septic tank with not the proper grease traps on the restaurants. And they're actually having to pump out the sewer system every 2 weeks. Disaster. So we said, hey, it's going to cost us this much money to fix it. Either you fix it or reduce the contract. The seller said, I'm not going to do anything. You need to buy it. I give you a great price on it. We said, thank you very much. Now, from what I understand, that deal's come back around. And hopefully, because you got to make sure you do due diligence. If we didn't catch that, that could have been a $750,000 miss. That is a huge miss. That's where nobody makes any money on a deal, right? Now you're raising capital. This is what I do, right? And everybody thought it was easy to do. My first deal, I did cut and paste emails with an Excel spreadsheet and a Word document because I didn't have a CRM. I didn't have any tools. I didn't have any support. So again, you really need to have a CRM. And then this happens to me all the time. Hey, Trevor, if you get a deal, we're interested. So I get a deal, invite them to the webinar. They come to the webinar. And then I send them a note saying, hey, did you enjoy the webinar? You got any questions? Let's book a call. Crickets. And then I say, hey, I don't want to be a pest. Are you interested? Crickets. And it happens a lot, right? So again, some of it happens because investors, they're kind of nervous to say no to you. And so you need to make them feel comfortable that, listen, no is an okay answer. I'm just trying to get an answer from you. I'm providing you an opportunity. I'm not selling you anything. I'm providing you an opportunity to double my money. But it can be super challenging if you're on a push to close the deal and nobody's calling you back. It's a lot of work to be able to do that. And then when it's closing, I remember when I closed my first deal, this was before I joined Massive Capital. Goodness me, the amount of moving parts. The insurance company said this. Next thing you know, the bank wanted that. Next thing you know, the lender wanted this. Next thing you know, the seller said, you've got to tell you what the seller said. We finally closed and we said, is somebody going to meet us to give us the keys? He said, break in. I'm done with you guys. You've taken too long to close. So we literally had to break into the office and hire a keysmith to get into some of it was ridiculous. But again, we did it because we had a team and we were able to do it. Now you bought the deal. How many people own a deal and they thought the property manager would do everything? Again, you went to one of these 3-day courses and they told you, buy a property. Everybody will throw money at you and you'll sit on the beach and somebody else will do all of the work and the checks will roll in. I'm telling you that doesn't happen. It's a lot of work. It's hard work. And again, that's why you want to invest in people that are willing to do this work, that are willing to take the challenges. This is the beauty of being a limited partner. You don't have these responsibilities, but it's also when you want to switch to be a general partner, these now become your things you want to do. So why does it matter, right? LPs earn passively, but GPs build wealth and influence. Transitioning from an LP to a GP allows you to have a little more control in your investments, build a brand. I spend a lot of energy building my brand and my investor base, and I create a scalable long-term income. Now, again, we've talked about passive investing. Remember, when I talk about a lot of the deals, I'll say that, hey, you make a little bit of money on the acquisition fee and you have that preferred payment. Well, until that preferred payment's caught up, I don't make any money. And to be honest, I make most of my money when the property goes full cycle. So I'm waiting 5 years. I'm in 14 deals and I'm waiting 5 years to get paid because you don't really get paid until the end as a general partner. So again, I like to make sure that people understand it's important to create that passive income. First of all, it gives you experience, but it also gives you some cash flow that comes in. So here's sort of some of the differences, right? So a general partner, they're an active manager. They find and execute and oversee the project. Liability, they have all of the liability. Now, depending on your loan, on multifamily, you can often get non-recourse debt, but on development, some of our other development deals, it's full recourse debt. You're on the hook. You do have control over operating and decision making. You generally don't have to provide a lot of the capital. You'll still have to have some of your capital. Lenders usually require at least 5% of capital into the deal. Some deals they'll put more money in, some deals they will put less money. They do receive management fee and shares of the profit. And of course, they have higher risk due to management and personnel guarantees and liabilities. Now, as a limited partner, passive investor, you provide capital. You're limited the amount of investment, right? You could only lose your investment. You can't lose anything else. You have little to no control. You can't change what the GPs want to do. Sometimes they'll call a vote. We're going to do this, and they'll call a vote, but very rarely. And again, you're normally providing most of the capital besides the bank debt that comes, but you receive your return based on the performance of the property. And then you have no risk other than your initial investment that goes into it, right? So an LP experience, it's your foundation, right? Because you've seen how deals are structured. So as a passive investor, I've seen how deals are structured. I've seen how general partners are communicating with me. How does it feel from my side? And I'll be honest, I've been everywhere. I had a deal once and I was super frustrated. The communication was really poor. They did an investor update that basically told us nothing. And I sent an email, am I making money or losing money? They sent me a one word answer, make. That was it. The net making. That was their answer. And I was like, I can't believe this. That was their answer. So I said, well, could I get a little more information about that? And their answer was, would you like to sell your share? And I said, absolutely, make me an offer. It took them about 3 months and they did buy me out. The deal was struggling and they wanted to switch and go a different direction, but it's okay. But again, you watch the good and not so good. One of my first webinars I went to, there was these partners and they talked about a deal that didn't go so good. And I actually found that refreshing. And to date, it's been my best investment to date. I wish I had more like this. I invested in their deal and in 20 months, they tripled my money. So remember, I'm talking about doubling in 5 years, tripled my money in 20 months. I'd like a couple of more of those. And guess what I did? The money showed up at my bank at 10 a.m. and it left at 11 a.m. to go into their next deal. Because again, they built the trust, right? I understand what they did. So again, from LP to GP, how do you transition from passive to active investor? So what you want to do is you want to review your past investments, what worked, what didn't work. You want to build relationships with existing investors. So again, if you want to be part of a deal, remember all my hats. You need to find a team that you have synergy with. Now, often when people are looking for a team, they're thinking, well, Mike and I, we're pretty similar. We should go get in a team. Exact opposite. Go for somebody that's completely different skill set than you. And we'll talk a lot about that, your zone of genius. Join a mastermind or a group of investors. And again, we do have massive masters. Talk a little bit about that. Start small, co-GP with a deal, get part of a bigger deal, and learn the business from the inside out. So again, a key sponsor's role, they usually include finding a deal, underwriting, remember all my hats, sources to analyze property. You need capital raisers. The capital raisers build investors and relationships and they raise the fund. You need an asset manager. They oversee the property performance and strategy. You're going to want somebody who's pretty good at compliance and legal just to be sure that everything is SEC compliant. And this is a very oversimplified view. There are a lot of jobs and duties to do, but they're super important that everybody has a role within their skill set, right? So again, your zone of genius, you want to find out your passion, what you love doing, and your experience, what you've already done, right? So you've got some experience, you've got some passion, you've got some skills, and it ends up in your zone of genius. So again, my experience was I was a passive investor. By the time I did my first GP deal, I was in 11 LP deals. So I had a lot of experience as a passive investor. My passion was I'm passionate about telling people about how they should create financial freedom through real estate investing. I waited till I was 58 to make my first real estate investment. I wish I'd have started when I was 18. Okay. I knew better and I didn't do it. And so that's why I had that goal of 100,000 people, right? That's my passion and my skill. I believe my skill is connecting with people, helping people understand what they're doing, just being a good connector with people. So you put that all together, and this is my zone, right? This is what I do. So again, I talk to passive investors, help them to learn about investing into particular deals. Now, your skills may be completely different. Some people wouldn't want to do these presentations like I do. They would be very uncomfortable. If you can't tell, I love it. I enjoy doing this. I enjoy talking to people. I enjoy helping people learn. But some people are much more analytical. They'd rather just work on the numbers and have somebody else who does it, right? So again, that's why you need a team. Now, if you are raising capital, you must do it legally. Legally is very important, right? So as a 506B, you can only do your friends and family. You can't publicize or advertise. I can't tell you the number of times where I see somebody posting a deal on their Facebook page that's not a 506C. That is a complete violation of SEC rules. You cannot do it. You can only do it when it's a 506C. We have a great securities attorney that does all of our things. And of course, you don't promise or guarantee returns. You tell them that they're projected. But I want to talk a little bit more about raising capital because you can't just raise capital for a deal. That also breaks the guidelines. You need to have some sort of active duty. And the active duty can have different forms of things. So on my active duty of investor relations, my job is to deal with the investors. So I make sure that I help you with your investment. I answer all of your questions. I make sure you knew when the investor webinars are happening. I can follow up and take calls and answer your questions. I show up for property management calls. So we have GP calls where we talk about the property because I need to know what's going on. Because if you ask me a question and I don't know what's going on, you're going to lose confidence, right? And then I'm going to make sure that, hey, listen, did you know that the webinar was done and it was sent to your email? Did you know your K1 is there? You need to have some active duties, right? You need to be involved in active management. You cannot just raise capital and sit at home. That violates the rules unless you have a series, I can't remember what it is, some sort of license as a financial planner. You just can't get compensated for raising capital. So again, as a person who raises capital, how do I build trust with investors, right? Be transparent about my experience, educate instead of sell, right? I don't sell anybody to invest. I educate you to be able to do it. You show a track record, even if it's small, you communicate consistently, and you always do what you say, right? So again, somebody who does this, somebody who builds trust, builds relationships with people. People invest with people. They don't invest in deals. They invest with people they know, like, and trust. And so you need to be able to do that, right? So you think about yourself, just think of what is your area of skill? What would you like to do? And again, you may just decide, listen, I just want to be a passive investor. I don't want all that responsibility. My goal is to ultimately just go back to be a passive investor, right? That's my ultimate goal. And again, you don't have to be great to start, but you have to start to be great. Okay, so again, we talked about it at the beginning, take doing it right. You don't have to be great to start. I wasn't great when I started, but I had to start to become great. I'm still trying to get great, right? So I want to talk a little bit about why I think investing in multifamily is still a good idea right now, even though there's some distress in the marketplace, right? I've shown this chart for a few months now. This is what rents have done. This is what mortgages have done, right? There's never been a bigger delta. There are going to be a lot of people that are not going to be able to afford houses. Now, there's this big talk now that they're going to do 50-year mortgages. Kind of freaky if you think about it. You'll never own your house, right? You'll be paying interest till the day you die. But there's a lot of things that happen. But again, the goal is to try to have people put more capability to be able to get a house, right? So again, multifamily provides a reliable source of income from multiple tenants, right? We've talked about this before. Have a property with multiple tenants. I talked earlier, if you have one tenant in one house and they trash the house and they leave, now you got to fix the house. It's all your responsibility. Then you got to lease the house. Then you got to hope you got a new tenant. When we have bigger properties like our one in San Antonio, 200 doors, we're renovating 10 units a month just because there's a lot of turnover, different things. But we have a full-time crew that does that. We have a regional manager. Well, first of all, we have a property management company. They have a regional manager. We have a property manager. We have a leasing manager. We have a maintenance manager. And this is what they do for a living, right? So again, there's a lot of steady income potential in multifamily or just single multiple unit things, right? If you own one building and there's one tenant, even on a retail space, it could be if they're a great triple net tenant and they're going to be there and they've signed a 20-year lease or 10-year lease, okay. But like on our retail thing we have here in Austin, our leases are between 3 and 5 years. We have one 10-year tenant, I think, signed. So you got to make sure that you have all of the different things covered, right? You can get some long-term wealth from appreciation, right? Multifamily tends to appreciate. And if you remember from some of the other things that I've done before, we force the appreciation by increasing rents, by doing different things. So again, on my 200 unit property, if I can increase rents $100 a unit for 200 units, that will actually increase the value of the property by $4 million. Think of that. $4 million because you've got 200 every month times 12 months, but it's the value of the net operating income. If you have a single family home and you increase the rent $100, your single family home doesn't go from 200,000 to 220,000 in value. You just have $100 more cash flow. No, cash flow is great when you have a single family, right? We always want to be in a cash flow positive position, but you're not creating that long-term wealth appreciation, right? Oh, my slides got stuck. There we go. It's easier to finance. It sounds crazy, right? But when you've done it, and again, you have to have the experience. That's why a general partner team, right? So the sponsors of Massive Capital, they're the ones that have the balance sheet, the liquidity, and the experience. So when you're going to get a loan for any commercial real estate business, let's say I told you, remember, getting a $7 million loan, you need a $7 million net worth. You also need 10%, which is $700,000 liquid that a bank can come and take right away. They're looking for consistency. And then have you operated a 200 apartment unit before, right? We manage just under 2,000 apartments. So we can get into that where we can be able to prove that we do it, right? And again, beauty of multifamily is their non-recourse debt, which is a great way to be able to get debt. They have amazing tax benefits, and we're not going to talk too much about it because I want to make sure I get through everything here. The power of cost segregation. Got a slide a little bit later that will tell on my current operation. You're going to get this loss on your K1 at the end of a taxable year. You can diversify, right? And I told you before, I'm invested in multifamily, I'm invested in storage, I'm invested in medical, I'm invested in existing retail, new build retail, industrial. So you can mix and match, and you can have a lot of balance, right, on what you're going to be investing in. And you can just ride out different markets, different trends, different things that happen. Obviously, there's a lot of economies of scale. I'm going to go real quick. Don't wait to buy real estate. Buy real estate and wait, right? Remember, I've told you this is not a get rich quick. This is a get richer slow. And I want to make sure I'm clear with that. I'm not trying to tell you things. So again, I've mentioned before, we have the Massive Masters. And we have other programs that people are involved here. There, some of the folks who are with me are part of the Big Dog Group. And again, if you hang out with successful people, they will brainwash you into believing in yourself and thinking that you can achieve anything, right? So again, very important. So I'm going to talk about some Massive Masters. These are a couple of partners. They did a presentation on a deal with me last night. This is David and Leonard. And this is a great deal. This was our first deal we did with them. So they own a 16 unit. And they went from a 16 unit to a 52 unit. So you can see the apartment behind her. It's a pretty nice apartment. It's Westwood Villages. It's in Midland, Texas. And they just finished their full first year. And again, remember, we talked about different things, right? So on their projections, they projected they would do about $817,000 in gross revenue. Well, they did really well. They managed to get $882,000, which is almost a $65,000 increase, or 8%. They said, we're going to cost about $400,000 to run the property. Ended up costing them $373,000. So they saved just under $30,000 on operations, about 7%. Remember, we've talked about the NOI. NOI is king in commercial real estate. This is where the value of a property gets produced, right? So they said, hey, the end of a year, we should have about $414,000 in NOI. Well, because of the greater income and the less expenses, they actually ended up at 509, which is $94,000, almost 95 ahead, which is 23%. Now, when they did the projections, they told investors we're going to be able to generate about $161,000 in cash flow. It's going to give you about a 5% return. Remember, we said they have a 7% guarantee, or 7% preferred return. It's not guaranteed. I misspoke, which means until we get to 7%, we don't make any money. Well, they ended up having $235,000, a little over $250,000 distributed in their first year, which was 7% more than projected. Now, I want to make sure I'm clear. Past performance is not always a guarantee of future performance. I just want to tell you, remember, we talked about finding people and they're core of genius, right? So again, Massive Capital is a partner with them. We provided the system through Massive Masters for them to be able to do it, but they are the ones, they're the lead sponsors of this particular deal, and they're the ones that both doing this full time, and they manage the property through their property management company. So we do have a current deal with them right now that is a 506C. It just switched over to a 506C. It's in Hope Mills, North Carolina, which is a suburb of Fayetteville. It's 60 units, 34 of them were built in 85, 26 built in 2006. This is the newer units. And again, if you remember, it has a 7% preferred return, which means until you make 7, we don't make any money. This one is a 2x multiple and an 18% IRR. IRR is a very important number. It's really the time use of money. So if I double your money in 5 years, it's about an 18% IRR. Because again, it depends when you get the cash flow. If I double your money in 10 years, that's only like a 12% IRR. Remember I told you those people tripled my money in 20 months? That was a 57% IRR. Again, I like a couple more of those. And they're not producing it on their second deal, right? Things sometimes you just get lucky right way, right? So again, this is the numbers, and this, remember before we talked about how the cash flow happens. So right now they're predicting about 5.5%, 6.5% cash flow, 7.5%, 7.5%, and it averages out to the 7%. So if you remember at the beginning, I said general partners won't receive anything till the passive investors receive at least 7% on their money. So general partners are not going to make any money until you've made at least a 7%. So we're not projecting general partners to be able to take anything out of this deal till sell. So we want to do better. The one I just showed you, if they can keep up that spin, they'll be able to start taking money out of the project, right? So again, you put 100,000 in. We're estimating that you're going to get about 35,000 in cash flow. You're going to get about 70,000 more from the sale. You're going to get your 100 back, so it's 205,000 estimated over the 5-year hold, which is what we talked about earlier, 2x of your. Now, if you remember, we talked about bonus depreciation, right? So on this particular property, if you invest $100,000, you're going to get a $63,000 passive loss in year 1. Passive loss goes against passive real estate income if you are a W-2 full-time employee. If you're a real estate professional like I am, I do this full-time, it can go against my total taxable income, and you will get more money over the next 4 years. You'll actually get more than your $100,000 back in depreciation. Makes no sense, but this is the big, beautiful bill back in, right? Love him or hate him, when Donald Trump said, I don't pay any taxes when he was debating Hillary Clinton, this is the reason why he doesn't pay taxes, and probably the reason why he put the big, beautiful bill back in together. So again, if you're interested, I'm going to put a link in the chat too. If you're interested in investing in this deal, I'm going to put this in here. You can scan this, take a look at it on our portal. And again, if you're just interested to learn. You still have time to be able to do this before the end of the year and get your taxes right. You want to finish your year strong. I get a lot of things about finishing your year strong. If you're a lady in the group and you haven't joined the ladies Jasmine, my partner, she was on my investor relations team, but she switched over to land development now through another division within Massive. But every other Tuesday, so next week, she'll be presenting. That's a link to join her. And of course, I do the second Tuesdays. Again, if you're going to be a passive investor, you still need to be actively. You still need to be learning. You need to do things. If you want to learn about being active, what I talked about tonight, you can do one of our weekend strategy sessions. And again, massive dreams need massive action. These are the 3 main partners of Massive Capital. This is Sanjay, who I actually did my first investment with 7 years ago. It's quite interesting how life goes full cycle, right? I met him, decided to do my first passive investment. We became friends. And then now we're doing Massive together. You're one decision away from a new life. Take massive action. Again, my goal is to help you. I'm going to put my contact info in the chat again, and I am going to stop presenting, see if everybody's still here. I know Mike had to leave. He sent me a note. Anybody have any questions? I know Mai, you had a bunch of questions. I don't know if you can unmute today when we were talking, but we can talk tomorrow night. We're going to meet at an event tomorrow night down in San Antonio. It's good to see you too, Tanya.
Yeah, we can talk tomorrow.
Oh,
Is that tomorrow? Oh,
yes.
tomorrow. Yeah,
Yes, tomorrow.
I'll be there.
Awesome. Any questions anybody has? Hopefully you found that useful. If you're interested in any topic being talked about, also send me a note. My goal here, right? I create what I think people want to learn about and what they might find helpful. And these are always posted. Let me just pop that into the chat too. These are always posted on the Massive Capital YouTube channel and along with the ladies ones. So if you ever want to just watch the YouTube channel. Thank you, Tanya. I don't know if you saw today too, Tanya, or at least I learned this week that RE Mentor is no longer going to be offering mentoring services by the end of this year. I don't know if you heard that. I heard it through a WhatsApp group I'm in. So interesting. It's a great group.
Are you referring to the big dog mentoring?
No, it's
Or-
RE Mentors, a guy named Dave Lindell.
Oh,
Tanya's also a big dog, but she's also part of RE Mentor.
I see.
Yeah, there's a lot of groups. Yeah, he's retiring, and a guy named Tim Mai from Hero Capital is going to help fulfill some of it. So good friend of mine, Tim. He does a great job as well. Awesome. Well, I really appreciate everybody showing up. I want to wish everybody well, first of all, I should have started this. Any veterans, thank you for your service. I'm from Canada. I always joke that we have 2 canoes and a beaver for our military, which isn't really true because Canada actually did tons of peacekeeping. But have a happy Thanksgiving, and I'll be doing a bunch of property tours coming up. So I have one. Oh, I think I can unmute you. Should be able to unmute. I keep clicking it, Tanya. I don't know. And anyways, and then so I have a property tour in Austin on December 1st. I have another property tour in Dallas the first Saturday, and Houston the second Saturday. Houston, we're still sorting out the property tour.
Are these all commercial? Or
Yes.
family?
Yes. So the one in Austin is a retail. The one in Dallas is in Fort Worth. It's an apartment complex. And the one in Houston, we're actually going to a retail property from our company Realty One that builds it. It's one that they just finished. And then if people are still interested, we're going to go look at dirt. I know it's not very exciting. The first tour we did, we just looked at dirt. But we looked at the neighborhood and we invited all our investors. And on that particular one, it's in Richmond, Texas. We're actually building 62,000 square feet of retail. We have 1,000 feet of frontage in a brand new residential development. Super excited about that. Also, sometime early next year, we'll be starting construction. Hopefully, fingers crossed, December 3rd. We've been delayed almost a year building our X-Space high-end industrial storage workspace. It's going to be incredible. If you can imagine, it has car lifts and you can put your Ferrari in your office. So I refer to it as a very expensive, basically kind of a WeWork place for eccentric, wealthy car enthusiasts. And at the grand opening, it was quite hilarious. There was Ferraris and Lamborghinis when we did a groundbreaking. These people, and again, for a lot of business owners, because again, they're going to pay taxes on it. It's better for them to buy it. And they basically create a man cave. We have one here in Austin. It's amazing. Paul Sink, who I did my passive investment on the medical center. He's an ex-surgeon. He was one of the first people to buy a unit in X-Space. It's a pretty cool project. Awesome. Well, everybody, enjoy the rest of your evening. You have a great Thanksgiving, and I will see you the second Tuesday of December, if not sooner. Thank you.
Great. Thank you. Thank you, Trevor.
Take care. Thank you.
Sure. Appreciate it.
All right. Have a good night, everybody.
We'll see you